All right, welcome back to The Big Skinny with me, Lou Basenese, and I gotta confess, this is my favorite part of the show because I get to bring in really smart people, really experienced people that have a phenomenal track record and then get to learn from them. We just ask the questions and sit back and learn along the way. So without further ado, I'd love to welcome Daniel Newman and Shay Boloor, both of Futurum, setting records and breaking lots of things on their way to big success in the big tech market. But welcome, fellas.
Thanks for having me. Us,
yeah. What do you got on your hat there? 10,000 and waves tattoo. Did we have a new tattoo? Do we have to all share tattoos? Who's got tattoos?
No, it's fun. It's my sister's shop. I don't have any tattoos. She's covered in them, so we're polar opposites in that way. But I love rocking her shop on my hat whenever I'm on any kind of stream.
I love it, man. Supporting your siblings, nothing better than that. All right.
Well, maybe he'd wear a big skinny hat if you gave him one.
I know. We got to work on merch. Dan, the man that's here in the studio, has got a big skinny gear on. But maybe if I got a Futurum Equities hat still, because otherwise I'm just stuck with this.
I do get a lot of call outs for the merch. Like we have a lot of great Futurum merch, and I get a lot of requests for that. So maybe we'll hook you up one of these days.
Yeah, we need to get you a swag store. So let's get right to it, because what everyone else wants in addition to the swag is good stock ideas. And I got to be honest, you guys have been crushing it lately. And I love Shay shares it all publicly, his individual portfolio. So what was the biggest surprise in big tech earnings, the biggest surprise mover for you guys?
Ooh. I'll jump in first while he thinks about it. I mean, look, I thought there was just some great prints that went the wrong way. I mean, my big, I think I went on and you and I were in the studio together at Varney a couple different times. I came on that day. I'm like, Microsoft's going to crush it. And then they crushed it. And then they went down like 5 or 6% in the week. Like, I mean, this was one of those absolute cases, though, where the movement of the market had nothing to do with the actual stocks and the performances. It was all about people's fatigue, in my opinion. It was all about people's fatigue with the government being closed. And there was like it was starting to send a punitive message to Washington that if you keep it closed, we're going to start to do things that don't only affect, the federal workers. We're going to start to affect the market. And then you notice all of a sudden it started to pick up the speed of getting things done. But I mean, Microsoft had an absolutely amazing print. This is not a company that people think is highly overvalued. It's not a company, it's the company that has the most NVIDIA infrastructure stood up. It has one of the most readily available AI impacts to its business. It's diversified. It's highly enterprise driven. It's got these big contracts with Copilot that it's winning. And overall, though, it had the biggest growth rate. And so, I've been you and I've we've been the Google guys. Everyone's like, Google, Google was underpriced. It was underpriced. Well, Google actually said it's finally fair, but it actually went up on its earnings. Microsoft just got crushed, which totally surprised me because that was best print.
It was a shocker, right? But Shay, do you think this is a case of good is not good enough anymore for tech investors? Have we been spoiled too much, or is there pockets of growth that we're just not seeing?
I think a lot of big tech's a bit anchored on any kind of upward surprise because of the amount of Capex that they should be investing at this stage of where we're at in the AI cycle. But for Google, for example, like I think that was kind of the most. It's funny because all three of us were very bullish on Google before it was popular among the masses. So it feels like saying that we were it was the minority to be bullish on Google feels odd in this group because we were all just big time bulls, but it was the case. But like Google's cloud is just every 3 months we're reminded how they aren't the little kid anymore among the big cloud service providers. Like Google Cloud hit, I think, 150 bill. I think it was up around 40% sequentially, which is insane at that scale. And I think that we got another data validation that search isn't going to be getting destroyed by AI. And in fact, it's going to be quite the opposite. It's going to turn into something drastically different. And Google is like now showing that their TPU business should be taken a lot more serious than what people have been appreciating the past couple of years. Going off of the Microsoft point, like I think they ran up entering that print. I think that was their issue. I think that I want to say their AI capacity increased 80% this year, and their whole data center footprint will double in 2 years. I just think for me specifically, Microsoft's too messy to understand what the actual thesis is because they're so intertwined with OpenAI. Azure numbers are difficult.
Too messy because they've got other business units that take up, like gaming, or because they're intertwined with OpenAI. Where's the messiness come from? And then second part to that is how do they unwind that messiness? Maybe for Dan.
I think because the Azure lines, I don't think there's any kind of clean visibility exactly what's happening at Azure because it's just so intertwined with what's happening in OpenAI. Like for Google Cloud, we get layers of information that Azure doesn't provide us, and same with AWS. So I think that to pass it to Dan after this, I think that their recent announcement or revision of their deal with OpenAI will help accelerate this. Maybe some increased visibility, but I don't know what's organic, what's raw, what's just insensual growth in Azure, and that's
Did you say
always my
insensual?
issue.
You just came back from your honeymoon. It's incestual, not insensual.
Insensual.
These young guys, Dan, they would love really young.
They didn't take English super seriously in school, and now they all have AI to do the writing for them. So, but the funny thing is, I think all the clouds have some of what Shai's talking about. I don't think it's totally unique. I will say Microsoft has such a big business with 365 that it's often been confusing with their, with Office 365, how much of that revenue sits inside of the Azure number. But Google has Workspace. Google hosts a ton of its own workloads too. So that's not necessarily true. AWS was always, in my opinion, sort of the purest form of growth when it came to IaaS. Yeah. And of course, they're now standing up a lot of their own software, ads and different businesses inside of their own infrastructure. So, and now they're all doing deals with OpenAI. We had an OpenAI deal with AWS this week. There's a Google deal with OpenAI. There's an Oracle deal with OpenAI. I mean, OpenAI is going to be the world's biggest hyperscaler if they execute in 5 years. So there's an interesting talking point for the investor class. But I actually think Satya Nadella did a master class in that renegotiation. He got the defined ownership in that company rather than this AGI rate limited profit sharing program that he had that had really no on paper value. He turned $12 billion into arguably 200. It's a 500. So about 130, 140 billion now today because it's what
I think
$500 billion company.
I think Satya is in the camp of Tim Cook early days, right? Like everyone doubted him, and then Satya's just done nothing but execute. So I think he's crushed it. But
my biggest point is that's it is going to weigh on their earnings because that company's a loss maker. And now they got to take 27% of those losses for a period of time. But if anyone's got the balance sheet to absorb it, they have the balance sheet to absorb it. But I think my thesis right now was what did we learn today from the bounce back Shai and Lou? What we learned today was that none of that falling from the last week, it doesn't matter if it was ARM falling on its print, AMD falling on its print, if it was Qualcomm falling on its print, or if it was a week before with the big tech, mega tech names, they were not falling because the actual earnings were bad. And I don't even buy into this Capex stuff. You did a nice job in this setup. Look, I'm sorry, but Michael Burry does not know more than Satya, Sundar, Jensen, Lisa Su, the freaking president of the United States, and every smart person he has working for him. And the reason that Xi Jinping is ready to go to war with us over something in Taiwan and everything else, because they all know what apparently the bubble bears do not know is that if you lose an AI, you're going to lose the economic domination of the next 3-4 decades. There's no interest in losing that. They have to spend. Zuckerberg said it best. I have to spend big because I would rather overinvest than underinvest. It's existential to these companies.
No, that's absolutely well said. Shai, what do you think about this too? How do you respond to the bearish AI talk about, hey, this is it, it's too good to be true?
I mean, I welcome it because it adds additional dip opportunities, knowing that there's a high floor in any pullback, and purely because you've noticed the past 2 or 3 years, there's been so much noise that's happened in the macro environments or even the geopolitical front. And even just past couple weeks, people are arguing about the stimulus checks. Is that a good idea? 50-year mortgages, tariff dividends, shutdown headline, all of that. So these are all bad ideas potentially, and cause a FUD. But it centers around what really matters and what's the driving force of this market rally. And it's AI. That's the only thing that matters in this cycle. And we are so early in this AI build outs, knowing that the common denominator behind every sharp pullback that refuses to extend lower, and people still get caught off guard. Oh, it's a V-shaped recovery every single time. How is that possible? It's because the common denominator has not changed. It's AI. And it doesn't matter if Michael Burry's shorted thinking the valuation is extended because using a traditional value metric lens to see what's happening. Maybe, we're in a very unique time potentially, but tell me another opportunity in any tech revolution we've had where there's a nationalist priority associated with it. There's a corporate arms race, and the backbone of future economic power is all happening at the same time, causing this crazy super cycle that we call AI. that is only going to continue. So I think that anytime we have a 5% pullback in the market in less than a week, like those dips have been getting bought because big money knows how real AI is.
No, look, I think you make a really important point is don't pay attention to all the macro. There can be a million distractions. What's the underlying trend? And I always talk about this, right? The smartphone boom was the biggest example. Invest in trends that endure through economic cycles. Like through the financial crisis, did anyone stop buying new smartphones? Absolutely not. Is it no matter what happens in the world right now, is anyone going to stop deploying AI? Absolutely not, because it is the future and it's existential, right?
Yeah, there's something to it too. It's actually pretty deflationary. So if the market, I've been saying this since Fed tightening, was that actually automation, workflow, enterprise AI, again, this isn't a new thing. It wasn't new in 22. Doing things that basically took overhead and operational costs out of your business and it allowed you to be more efficient with tech. This has been a multi-century thing now, and we're going to continue to do it. And AI is going to enable companies to drive more profitability, drive more growth, do it with less cost. I mean, the real problem is the consumer. It's going to be like, look, if we do this too well and we put enough consumers out of work, who's going to be continuing all the spending? Because I think that was some of the trickle down of the government shutdown was we were starting to get worried about the health of the consumer. And if the consumer's health starts to struggle, that's when the economy starts to struggle. So there is all these different breadcrumbs. But I'll say one thing about the whole short thesis, bear thesis is, I think I said this, Lou, I said to you when I was on, we were on the Big Money Show together. I said, look, if you think it's a bubble, short it. I mean,
good luck to you, right?
Yeah, good luck, short it, good luck. Because the thing is like, we're going to find out at some point who's right and who's wrong. And I mean, you said this really well, and I got to give you credit, Lou. I don't give you credit often enough, but like in the setup, you kind of said, look, there is a possibility that we're in 1996, 97 right now. And that there is a 2000 moment coming up. And it will be, I think I heard one of the Microsoft technical executive staff say that like, there's no sign of a supply, demand meeting supply for at least 3 or 4 more years. So the point is there might be a point where we do find out we've overbuilt. And because AI is proliferating so fast, it's unlikely to have as long of a bubble period as say the internet did for finding utilization, but there might be a hard crash. We might see a 40% run up from here before we see a 30% crash.
Yeah,
35% pullback. Dude, your point about getting out at the right, but it's not now. The thing is like we are not there yet. Well,
look, there's a great quote from Peter Lynch, right? More money has been lost by trying to predict the top than has been lost by staying in the market and invested over the time. So, right, if we go up another 200% from here or 100% from here and have a 30% market correction, you're still way ahead of versus being like pulling out of the market right here and saying like I'm going to sit on the sidelines for a better time. But
Lou, I rode SoFi just as a quick anecdotal story. I bought SoFi after IPOE and I was buying it all the way up to like $23 up to its top. And I literally, rode that thing all the way down to $4. And now after dollar cost averaging, I'm up
30 plus. Yeah.
Well, I'm up 30 plus on the stuff I held. I'm up 300% on my DCA. And I'm saying that was over just a couple of years. So I'm saying we're crushing the average S&P or hedge fund investor just by staying invested and staying committed to your conviction of names that and companies that you like. And I mean, these are real companies with real growth, real earnings. That's the same thing with Palantir, man. I know everyone likes to talk about Palantir, so I'll just throw that ticker out there. Look,
I don't even know what they do, though. I got to confess, I'm a seasoned analyst, and I have no clue what Palantir does except make money. That's it.
It's ontology. Just use the word ontology. You'll sound smart. But basically, is that
oncology related to cancer? No, it's like digital cancer. I don't know.
Ecology. It's ecology. Yeah, that wasn't. Not funny, Lou. But anyway.
It's my birthday, man. Give me a break.
Oh, you look great. You look good. Okay,
so Palantir, let's get to Palantir. Really, explain to the layman, what do they do? What's the future?
It's so extended. It's so highly valued. It was running up it was up 300% at the very top, or 260, some ridiculously high number would have hit $200. Or what does it say here? 231. And the point is it pulls back 10%, 20% on its earnings. And everyone's like, oh, it's only up 200%. And the point is look, this is a company that's growing at a rule of 90. What was it? Was it a rule of, was it over 100? Shay, you know this, right? It was
114. 114.
Rule of 114. So what I'm saying is look, you can bet against it because it is extended right now. And you're typically correct. I said, whether you're long or you're short Palantir, you have a reason to be either. But this is just a freight train. I do not stand in front of freight trains. I do not stand in front of a company that's growing this quickly and a CEO as smart as Alex Karp. So what I'm saying, this is a perfect example where, look, there's a reason you could short it. I just would I'd find something else though, man, because
No,
this
look,
company's growing way too
I
fast.
agree. Look, shorting based upon valuation and being overstretched never works out consistently. And just because some guy who made a huge bet and was right once doesn't mean he's going to be right again. I want to open up the floor. We got some questions and comments coming in. I've just complicated it because we've got so many people. Do you really need to know anything else, Lou? Vanessa Michelle, no, I don't, because Dan knows everything about Palantir. They make money. That's it. That's what Palantir does. They're making money for shareholders and themselves. Question here, though, came on Oklo, another name, right? A 16 billion market cap, up 400% year to date. No revenue, no reactor, and still pre-commercial. Sam Altman's backing and the nuclear AI hype. What's really fueling this valuation heading into earnings? Vision or pure speculation? Shy, this is I believe one of your holdings, right?
I mean, no, it is. I just think it's probably the best derivative on the fact that AI data centers will quadruple global power demand in the next decade. And I think, again, it fits that SMR space really well. It's the best moonshot. It has the best scalable model for the SMR space, which will help with the AI data centers deal with that power demand issue they're going to experience next decade. And right now, they don't really care about revenue on that front. And I think that it's just, again, you can say maybe that's where the bubble is in the market because fundamentals have zero impact on why people buy Oklo. They're just buying and knowing that power demand is just going to go through the roof and not just temporarily, permanently.
But
so
I think
that
make it a longer dated option on it though, right? The
exactly.
fundamentals
That's
aren't
what
there,
I'm
right?
saying.
Yeah,
Because that isn't inevitable. Like everyone, doesn't matter if you're a bear, AI bear, there's a power demand issue right now. It's going to happen in data centers. We're going to potentially build AI cities, too many of them. Doesn't matter if you agree with that or not, potentially. And that's going to hit the grid, hit the power demand. So Oklo is kind of that nuclear moonshot play that will get a lot of funding from the government. I think a lot of people in that space are underpricing the sovereignty angle on nuclear with the Oklos and SMRs. And I think that's why it's not a quarter-to-quarter story. It's like earnings for Oklo is meaningless. Like it's just empty. It's not going to matter at all.
Look, I agree, and you shouldn't get flack for that because I've invested a large part of my career in small and micro caps that were all pre-revenue story stocks that were building a future that could get there, biotech, med device, and then they deliver and it happens. So I think Oklo is set up like that. You talk about power, you brought it up, so let's pivot to that space, right? We've all three of us too, bullish on TeraWulf, IREN, Cipher mining. Which one do you like the best out of all of them? Because it's like having multiple kids. It's hard to pick which one's your favorite. You're not supposed to say that out loud, but I just did. Which one's your favorite power mining stock?
I mean, I think IREN has the best. At the end of the day, it all comes down to economics. And I think IREN has the best economics among the group. But I do believe that the first wave that we're seeing, we call this AI utility theme at Futurum. We call it like trying to tackle the GPU capacity issue and data center capacity issue. We call it AI utility. So we talk IREN, Cipher, Wolf, even CoreWeave is among that group, Nebius as well. So I think IREN has the best economics. I think it was like 3.5 cents. They also have the vertical integration solution versus like the Cipher has a landlord angle onto it. But this whole bucket is going to do really well in the next 1 or 2 years, minimum, in my opinion.
I think you absolutely have to be levered to there. I mean, Dan, I know you're in the space as well. And recently, I love TeraWulf because I interviewed those guys, the CEO, Patrick Fleury. They all come from the power industry. So they weren't Bitcoin bros that decided, hey, there's a big opportunity over here. They knew what was coming. But what's your take on that, on the whole space?
I went on CNBC with him. So I did it with the TeraWulf CEO together. Yeah, we were on together. I'm actually, we're going to round it out. I'm a Cipher. I actually think Cipher has the lowest energy cost. I think theirs is actually the lowest cost. I do agree with Shai's point about the vertical, but I actually think that is a blessing and a curse potentially. They work because IREN's basically trying to be CoreWeave and Cipher. And so there's a learning curve to that. And so the question is, do these hyperscalers need these power utility companies to do that part of the work? Is there an opportunity for new hyperscalers to rise and really take on the full infrastructure build out? Or is there more value in just building out the power and the shells and then just being landlord? And I kind of like that part because I know how many years and how many decades these cloud companies have spent, these hyperscalers have spent to become competent to stand this infrastructure up. And I know how hard it is to stand up an NVL 72 Blackwell system. So I'm not saying it won't work. I'm just I'm looking at the angle, guys. There's a lot of other ways to play the AI infrastructure. I like the power angle.
No, I do too. And look, I think it's Mag 7, right? Like if you picked any of the Mag 7, you've done really well early on. This is still early days for the AI utility trend. Yeah,
so I'm in 4 of them. I'm in Cypher, I'm in Iron, I'm in TeraWulf, and I'm in Bitfarm. Bitfarm's my most speculative.
I'm in CoreWeave. I'm in Core Scientific as well. That busted deal with CoreWeave. What did you guys ever look at Core Scientific? And then we got a question on Cypher from one of the viewers too to bring up. So what about Core Scientific? Any positions or no?
I stopped looking after I thought they're going to get acquired. I don't know if they're still going to. I actually don't know much about it now.
Yeah, the deal
fell apart. I have a friend that works there. He's very bullish. I don't have any MNPI. I'm just saying he's very bullish and excited. I looked at
I had a good friend of mine was the former chief product officer at CoreWeave. They've had some change lately. I just always, speaking of the Burry comments today, like I always got a little nervous about their depreciation just because they are such a bare metal offering. They're not, they don't have the Nebius, but I think they're going to go that route. I think they're going to add more and more value added services on top of their infrastructure because they're going to have to. Otherwise, they're just going to be playing the race to zero margin game with the infrastructure itself. And I don't love that business model.
Yeah. All right. Let's pull up a comment here. I think it's from Chad Towers, who's a regular on the show. Happy birthday. All right, way to get that in there. Are these gentlemen pounding the table on CoreWeave, APLD, and I believe Dan has been strong on Qualcomm, Marvel, and Cypher in public appearances, other names not in the news. What else do you guys like, essentially? I mean, you still bullish on all those names? And what I know, Shay, I think you made 2 recent new purchases. So the folks want, what have you done for me lately? What's your new stock pick?
I mean, I can go on, like, Nebius doesn't get talked about enough, in my opinion, for the cloud utility angle that they're trying to do for AI age. Like going off of like what Daniel was referencing on Cypher, I mean, Cypher does have a higher floor than an Iron, for example, just because there is some risk on building into power and compute when Cypher, as of right now, I do think they're eventually going to go the Iron route as well, but they're renting out physical layer through long leases. I treat them more as a REIT that is a bit higher floor, just lower ceiling. But Nebius does have like that full ecosystem. They're building across the software developer layer. They were the first among this AI utility bucket to really land that hyperscaler deal with that $17 billion Microsoft deal. Confirmed, like, I think for the whole space that the model does work, since those multi-year contracts does secure enough cash flow up front and reduces the financing risks until like the utilization is guaranteed down the line. And I do think that if you want to look under the hood, like the Nebius data centers are 20% more power efficient than the typical cloud sites. And that is the name of the game for these hyperscalers. They just want every GPU per hour they sell cost less than they produce. Like that is the economics of that whole space.
I think your DigitalOcean call was good too, since some names that because I think they were asking about like what else you're trading. You made the call.
One thing before you give me other ones though, let me point out, I think you put your finger on the next big prediction. I think all these companies, these AI utility companies, are going to turn into REITs after they get to the point of like market maturity, which as shareholders, we're going to have tremendous capital appreciation, and then you're going to start spinning off dividends to us. I think it's going to be one of those plays we look like back on, the traditional data center play. What?
Happy birthday, Lou. You can retire on that.
Yeah, no, seriously. I mean, I hope so.
You want some contrarian calls?
Give me a contrarian call besides Viking Therapeutics. I think that's a great one, but what else you got? Because I own that one as well.
I love I love Oscar on the dip today. Got crushed today on this BS ACA news, but that company has been talking for multiple quarters that it does not need the ACA to be successful. I think it dropped like 20% today.
Down. It closed down 15%. OSCR for people listening. We got
about bombed. It's
thousands of viewers. What else? So Oscar Health is your top of your list.
I think that's a great one. Well, I just think based on the news today, and I'm going to stay on you've heard me talk about the analog of AI to human, innovation and human improvement and longevity is peptides. I think HIMSS is gotten absolutely battered. I love this company. I'm super long HIMSS. I'm going to stay super long HIMSS. I've been adding, and by the way, when these dips come like today on Oscar, I wrote a ton of options outside the money for like March 9-6 spreads, taking 40-cent premiums on a share. This is my trade. I'm not recommending anybody else. But every time Viking, for instance, would take that hard dip, it would get a big sell-off. I'd write more options. I'm doing 40-30 spreads, getting $6 a share. I mean, long-term, There's so many great plays. HIMS right now, I'm writing put spreads in the mid 20s, Lou, in January, February next year, and collecting nice premiums. I'm not getting a ton longer on common. I'm pretty dense already in that particular area, but every time these big drops come, I collect premiums on options, especially knowing that momentum, it's still a bullish overall momentum. There's a lot of, I won't call it free money, but it's as close as you can get to
look,
free
you're
money.
smart. It's savvy to be writing, against the volatility gives you great premiums. Shay, you mentioned another name. It just made me thinking Oscar and HIMS make me think of Tempus AI. I mean, you still a fan of Tempus?
Oh, absolutely. I love Tempus. I think they're a big. If you want to play AI in healthcare, that is the route to go. The amount of this data that they own is essentially the moat in healthcare AI. If you guys don't know that area, that is the moat, and they have the greatest. All they have to do is worry about the regulation. But I love the topic on contrarian plays. I'm big on FinTwit. Typically, people assume that I follow a lot of FinTwit plays because I'm big on there. That's not the case. One name that I've been quite bearish on for a while that is showing its colors a bit is Duolingo. Ever since $400, I just
love it.
I've never liked Duolingo. Again,
what's your core thesis not liking it? Just too much gamification and not actual results, like teaching people a language, or what was the core thesis to be bearish on it?
They monetize guilt over actual learning. I think a lot of people are going to realize in a couple years they aren't actually fluent in the language they're trying to learn, except they're just trying to make sure their streak stays alive. But for Duolingo, like even right now, like I'm realizing like a lot of the FinTwit gurus out there, how little they actually know about the enterprise SaaS space. Because they keep comparing Duolingo to Snowflake, ServiceNow, CrowdStrike. Yes, they're all SaaS, I guess, in a spectrum, but they are such different businesses and completely different realities. Like Duolingo, it sells a consumer learning app, and its entire growth engine depends on attention, motivation, and guilt, and discretionary spending. And that means the revenue can shift just like that. And I think the way their future's heading on a lot of the bigger players, they're going to have Duolingo-like products in their ecosystem for free. So if a new app becomes trendy, or household budgets might tighten up, or TikTok does something else that makes a new competing product, like the numbers are going to go down a lot quicker than people anticipate, where enterprise SaaS is the opposite. So I think a lot of people need to factor in how quick consumer behavior is fast and unpredictable. And Duolingo does fall in that lane way more than
I think it's
SaaS.
a great point, right? I grew up in an Italian Catholic guilt-ridden family, so that only worked for so long. And if people bail because of streaks, like you're seeing it in the user numbers, right? So I think you put your finger on it. And I love the fact, I think everyone mistakes the three of us as just like perma bulls on at least something at all times, but we can, to be actually bearish shows that we're looking at things objectively. So Dan, anything on the short side that you're looking at all, while I try and think of something on my side?
Yeah, I never short. My whole thing is I just stay away from things I don't like.
Same.
And I think that about half of the SaaS industry is actually features that will land inside of an agentic platform. So like Monday today reported, they are screwed. That company is so screwed. It's a feature. And like I said, it's not that I don't think there are great companies to short. I just think there's so many better, great companies to invest in. And I'm just the guy. I never show up at a craps table, Lou, and play the don't pass line. That's just not my style.
No, same. Look, it's unpatriotic to bet against stocks.
It's just like betting against American exceptionalism. I won't do it. I refuse. I will criticize quietly. But like as a whole, there is a whole space of companies right now that came out. They were vertical SaaS. They were industry specific SaaS. They were use case specific, persona based SaaS. They're all screwed. There's going to be like 5 to 7 of the big SaaS companies will gobble up everything that's valuable, and the rest in the next 3 or 4 years is going to disappear.
Yeah, so I'm going to throw one last bomb into the mix here because I have to be bearish on something. And like I'm like you, I don't actually short stocks. I did short this one time via options, made a lot of money. Said I'd never do it again. Never bet against Elon, but. My thing to be bearish on is Tesla. I love the pay package for him. I just don't see them ever dominating the robotic space and humanoid robots. They're not dominating the EV space. He's a great carnival barker. I'm just like ginning it up here to see your guys' response here because I think you guys are lovers of it. But honestly, I have a hard time buying Tesla because the valuation is overstretched and he just never delivers on his timelines. He's a genius, nothing against him, but I don't think he's going to earn his $1 trillion pay package.
Yeah, I'd agree with you on that. I think if he does get to 8.5 trillion and becomes larger than Meta, Amazon, Tesla, and Google combined, then, pay the man. I mean, that's my opinion, frankly, if he's capable
Agreed.
of doing that. But I'm actually not, I do own a little bit of Tesla, bought it a long time ago, have not bought in a long, long time. I just think there's better plays for growth. I think this is, it's more like betting on crypto or micro strategy. It's just so parabolic. Its moves are not fundamentally are strapped to fundamentals most of the time. It's strapped to emotions. It's super heavily retail traded, a lot of weird short behavior and manipulation going on this one. There's no doubt it could run up. It's just, it's not where I put my money either.
What say you, Shay? Are you bullish on Tesla? Or you own it? Or what's your view on humanoid robots?
I do own it. I haven't added it to that position in a while, but yeah, I mean, Tesla's a story stock right now, but I do want to call out that Elon hasn't missed ever in his career. So I think
he hasn't missed what? Like a layup? Like he's missed every single timeline, dude.
No, timeline, but he hasn't missed on the deliverable.
Yeah,
so
he eventually does it,
So that's why I think everyone agrees the next leg of the AI cycle is going to be physical AI, and Tesla is positioned to be the biggest beneficiary on that. So once that phase kicks in, like if Elon does actually deliver a timeline, who knows, maybe it's in 5-7 years. Eventually he will. I think it's going to be a perfect, they're going to be a clear category leader since Optimus, FSD, and their Tesla Energy, which is their second profit engine that's just humming, is going to be part of this like one unified narrative that's converting AI into emotion and productivity. And that's all physical AI.
Look, the potential's there. I think he's got to execute on it. To your point, I think also we had Chris Camillo before, who's deep in the robotics names. There's a lot of opportunities in humanoid robots that are still private. So I think we're going to get
Qualcomm
a lot of,
for this one.
You like Qualcomm?
This is where my contrarian bet is. They call them the dark horse. I mean, talk about low power SoCs. They understand, how to build chips for long lasting, efficient, low cost, and they could build scale like crazy. They've done it for cars. They've done it for autonomy. They're doing it for wearables. They're powering the Meta VR glasses. They're underappreciated, and they trade it like 13, 14 times forward. So my whole thing is with them is like, you want to take a flyer on something that's as dependable as that business and 13, 14 times forward, or you want to buy something that's already trading 150 times forward. I think Tesla's amazing. It's an amazing company. It's just, it actually, unlike even a Palantir though, its fundamentals its growth doesn't even follow it. It is all story. Like Shay said that so well. If you buy the story, you buy the stock.
Well, no, you're buying the belief in Elon Musk to get it done. I think you're right.
I'm rooting for him. Like I want him to win. I like him. I
want to go to Mars when I'm 100 and live to 200.
Man. We'll buy more SoFi. Sorry.
Well, listen, dude, you guys have never disappointed, delivering every time. And we whipped around all the Mag 7 names for the most part, delivering, contrarian bets on OSCR and Tempus AI and a lot of names other people haven't heard of. Would love to join you on a show or, and return the favor one time and have you guys back. When we get a chance, maybe through next earnings season, maybe we do another big tech celebration when we get on the other side for NVIDIA. Let me leave you with that. Quick 10 seconds. What's NVIDIA do and how does the stock react next week after it reports earnings?
Beat, beat, beat.
Beat, beat, beat. That's as quick as you can get.
It's going to be the catalyst for an end of year face melting rally in the market.
I love this. Happy birthday present comments.
$500 billion of visibility into orders between now and 26. Every breadcrumb from Coherent, from TSMC, from ARM, from every company that's reported, from all the hyperscalers, Lou. I mean, there's not a single clue at this point that indicates that it would be the biggest shock in a long time. And by the way, it would be a face melting sell-off. If they miss, they have to. All right,
so we got on one side a face melting rally or a face melting sell off if they miss. I don't think they miss. I think it's just going to be, is it good enough to keep ripping, roaring higher from here? But gentlemen, we could go on for hours. All right, Chad Towers got a question in. He's going to end it for you. Bought Qualcomm on your recommendation a month ago, Dan. Thanks. Is a CEO all right in the leadership role? What do you think about management?
Oh, man. Well, first of all, don't ever take anything I say as investment advice. Just want to be very clear about that. I'm full of opinions, though. I know Cristiano Amon. I know Akash very well. Worked with them for a long time. We advise Qualcomm, so there's a relationship there. I've been working for them for a long time. Cristiano is an investor. He's shareholder focused. He's growth and innovation focused. He's truly is a technologist and an engineer, does understand the business, but deeply cares about delivering innovation to the market. And I think he's, kept his head down and worked hard while the company has been pretty consistently underappreciated. So I like it for its opportunities in data center, for what it's doing in automotive, for IoT, and for the opportunity in physical robotics. I think handset's fully valuated. I don't think there's any upside there. I've said that to them. I say that to everybody out there. I think they'll do a good job running that business, but it's got a good leadership team. It's been pretty stable over the years, and I think there's a lot of upside with pretty limited downside.
Yeah. So buy Qualcomm from Lou Basenese, not from Dan. We won't say that. But
I did not advise. I do not advise.
Gentlemen, cheers to you on a special day for me for making it even more special. Really appreciate you guys being willing to share your insights, and look forward to joining again soon.
Yeah. By the way, Dan and Shay, I still love that. It looks like you had the country band, Dan and Shay.
Hey, I'm not opposed to that. Maybe we got to do this live from Nashville.
Wait, what are you drinking? Are you drinking tequila? When we drink tequila?
Yeah, no, it's an old fashioned because I'm so old. So I'm the old man of this group right here. So maybe we got to do live from Nashville next time, my friends. So, and everyone else, thank you for tuning in to get these insights.